So Republic Services, on the surface, it seems pretty simple, right? They pick up your trash. But when you start digging into the numbers, a really fascinating puzzle starts to take shape.
And that brings us to the big question. How on earth is a simple garbage company priced like it's a high-growth tech stock? What is going on here?
Get this. Republic Services is trading at around 37 times its earnings. That is a huge premium, especially when you see its 10-year average is way down closer to 28. So what gives? Well, the answer isn't really about collecting garbage. It's about building an absolutely impenetrable fortress.
In the investing world, we call this an economic moat. It's a competitive advantage that's just nearly unbreakable. And trust me, Republic's moat is one of the widest you'll find anywhere, and it's built on two massive pillars.
First, they own the landfills, and these are assets that are basically impossible for anyone else to replicate because of all the tough regulations. Second, their route density is dominant. That means they service more customers on a single street, which makes each pickup way cheaper than it could ever be for a new competitor.
And this really gets to the heart of their advantage. You've heard of the not in my backyard thing, right? Well, that sentiment makes getting permits for new landfills practically impossible. It turns Republic's existing sites into these irreplaceable, super valuable assets.
This moat gives them just immense pricing power. They recently increased their core prices by 7.3%, easily outpacing inflation. That is the sign of a truly dominant business. But here's the kicker. This defensive strength, it's only half the story. The market is betting on a massive transformation.
You see, Republic is evolving. They're not just hauling trash anymore, they're becoming a manufacturer. They're turning landfill gas into renewable fuel and processing plastics into new materials for some of the biggest brands out there. And this evolution is what creates the central dilemma for investors today.
So which is it? Is Republic an undervalued sustainability leader that's about to hit a whole new gear, or is it simply a fantastic, stable company that has just become way too expensive?
That's the core question we have to ask. Is this a future-proof innovator that's worth the premium, or is it a classic value trap just waiting to spring? We are just scratching the surface here. For the full deep dive into the financials, the strategy, and all the risks, check out our full explainer. Just click the link you see right here on the screen or down in the description below.